Everyone thinks they know property. We're going to break down today what the top 10 regions of 2025 were that Fresh Start invested in. Then we're also going to break down what the bottom 10, 15 regions in the country were of 2025. Has nothing to do with if you know the cafe next door or if you know a friend that invested there. This is just pure data and just pure percentage growth. Let's break it down. I'm excited. The best and worst regions in the country of 2025. How are you, my friend?
I'm good. Excited to do a different episode, something different. I think today is to show you how important research is. Mm-hmm. But also, which I've actually even told you this,
Okay.
there is something special towards the end of this podcast. So for the people listening, if you stick with us all to the very end and you learn what we're talking about here and you understand what's going on, at the end, we're going to give something away. Okay?
Goodie.
Something away, give away. And it's something for you to actually go back and learn and do, and actually not just listen to another podcast and, hey, I've just, listened to these guys talk, but actually haven't implemented anything. We're going to give you the tools and give you something at the very end, a little special gift, if you are interested, of how you can do this yourself.
Awesome. Don't skip to the end. Watch the entire podcast because it's going to be pretty impactful. I'm very excited, my friend. Let's get into what we're going to speak about. Let's start moving into what were the top 10 regions in the last 12 months.
So for Fresh Start, I looked at the last 10 regions that were invested, or the top 10 regions that have grown the most in the last 12 months.
Cool.
Not over since we started this journey of the last 5 years.
Yep.
The last 10 months. So, and I'm going to list the regions of how much they've grown from an LGA perspective. So when I say LGA, I'm not saying, the suburb of, let's just say Townsville. I'm talking about the whole of Townsville.
Gotcha.
So every suburb that's in Townsville, the council area, that's how much it's grown by. Okay. So I'm doing this with every region here today that you hear me speak about LGAs.
And so just for the viewer, the reason why you're saying that is because what you're actually alluding to, there's certain suburbs or certain properties that have grown a lot more than that, but just as an average as an overall. Is that correct?
And the data is more accurate when it comes from LGA because you're getting all the properties that are sold in the LGA, where if you just get the suburb, if there isn't many transactions or very low transactions from the month before the previous months, the data can be a bit misleading. And then when it's a bit misleading, it can be not, it can be higher or too low than what the average is.
Gotcha.
Or the median price. So that's why I like the LGA.
Cool.
Okay.
So you're going to break down the region and then when we stop buying. Is that correct?
Correct.
Let's do it.
Okay. Number 1. Oh, actually, you know what? I'm going to start from number 10. Mm-hmm. Let's start from number 10. And so this is an order. So number 10 is, you could say it's the lowest performing. And then we'll go to number 1, which is the highest performing in the last 12 months.
Let's do it.
Number 10 is Bowen. Okay. Bowen with Sundays. Okay. 18% in the last 12 months. Okay. It's grown by.
Not bad.
We stopped buying there end of 2024, I believe.
Cool.
Okay. We've been, I reckon we were probably the only buyers agent at one point buying in there.
Awesome.
When we started buying in there, I know we were probably the biggest buyers agency. There wasn't any other buyers agents. We're buying property for like 280, 300,000. And a lot of those clients' properties, I know my brother's, I bought a property for 330,000. A property that's a 3-bed, 2-bath, 2-car garage. I think it's like 15 years old or 17 years old.
Yeah, awesome.
Great depreciation, great rental return. I think it's renting out for $580 a week because of the high rental demand. Market's grown very well in the last 12 months.
Awesome. I love it.
Okay, so that's number 10. Number 9.
When did we get into that market? Sorry, can you also tell when we got into the market?
That market was around the start of 2023.
So we're in there for about 2 years, 18 months, 2 years.
About 12 months or so. Not long because we got out
towards
the end of
Gotcha.
2024. Yep.
Perfect.
Yep.
Awesome. So that's Bowen.
Yep,
Next.
Bowen. Number 9 is Playford, Adelaide. Okay, so 18% in the last 12 months. We got out there at the end of 2023, start of 2024, kind of like not really buying in there anymore.
And got in?
We got in 2021. I remember buying a property. One of the cheapest properties we've purchased was $245,000 in north of Adelaide.
Awesome.
That property is probably worth close to 6.
Awesome.
So great market, done extremely well. Number 8, Armadale, Perth. Okay, growing 20%. Stopped buying there at the end of 2023.
Gotcha.
Okay. Probably south of Perth, people will look and go, oh, it's a bit like maybe equivalent of like a Melton you could say, of Victoria. You know, when you look at Melbourne CBD, you know, it's got a little gringy, you know, demographic, but I think it's a great market. I think a lot of our clients are doing extremely well. So that's done extremely well. You know, 20% for a capital city, and it's still doing quite well, which is fantastic. Number 7, Albany, WA. Okay, at the very bottom of WA, there's a town there, coastal town. It's done 23%. Stop buying there.
It's huge.
At the start of the year of 2025, or we can say
2025?
or 2020. Yeah, at the start of 2025, and that's done 23%, and it's still continuing. So it's doing quite well at the moment. Rental market's super tight. Beautiful town, beautiful beaches, great economy.
How long were you in there for?
Probably about 12 to 18 months.
Yeah.
As well.
And just take note, as the viewer, take note of that. There's a very specific reason why I'm asking that. Everything's around that 12, 18, max 2 years, right? People thinking that they can go into a WA now, you know, parts of WA, it's been growing since 2021, 2022. You don't stay in a market for 4 years, 5 years, because it's already had 80, 90, 100% growth. So awesome. All right, next one.
Mackay.
Ooh.
Which is number 6, 24%.
Beautiful.
Which is huge. So when you hear 24%, 30%, or, you know, 18% for the LGA, that is massive.
Massive.
Because the suburbs can grow more than that.
Yep.
Okay, so which is pretty crazy. So Mackay's done extremely well. Towards the end of the year of 2024, we've kind of stopped buying there as well. Okay, which is great. Rockhampton, number 5, 25%. Okay, we stopped buying there at the end of 2023, and I think we could have maybe kept buying a little bit there, but we were seeing prices were growing pretty rapidly. Your mum's got a property there. You've got a property there as well.
Correct.
I bought a property there for my brother, and it's doing quite well. It's like that place that just keeps chipping away.
And there's still actual buyer's agents that are in there, actually well-known buyer's agents,
Yeah,
which is
there
super
is.
interesting.
Yeah, it is.
Why did you, specifically, while we'll talk on that, why did you get out of Rocky?
We were buying a lot 2020, I think it was. We started, and we we're buying probably for like 250, you know, not even 300 back then. Everything was like under 300. We started seeing prices getting quite high. And it doesn't mean there was a market cap and it was going to slow down, but we were getting to a point where we could get into another market that was like a Townsville, Gladstone, Mackay, or Bowen, and get, you know, there was no pressure of like, you know, having to put an offer in because there's 20 offers coming in.
Gotcha.
And it started happening a lot. And you started seeing all the other big buyers agents were buying there as well.
Yep.
I'm not going to name them, but you know, you probably know who they are. So it's like, okay, well, we're fighting over the same stock. Why not move into another market and not have to fight?
Yep.
And you start negotiating.
Yep.
So that was the catalyst. I think when people are listening to this, when do you move out of a market? When there is no negotiation and it's just putting your best offer, 20 offers on the table, and it's like, that's a shit market. We're not buying in there anymore.
Yep. Yep. And that's not obviously the only metric. There's all the other metrics as well.
Of course.
Rocky has been one of those markets, though, that has actually continued its growth. Will continue for the next couple of years.
Yeah, correct.
From the looks of it, from the data. But okay, cool. Next one. What's the next one?
Number 4, Townsville, 25%.
Your favourite market.
One of my favourite markets. So it just seems to keep going along and along. We stopped buying there at the start of 2024. Start of last year, we stopped buying.
Probably could have kept buying.
We could have kept buying, but it was getting to a point, the same thing. This offers was getting blown away. It was pretty crazy. Normally Christmas, the Christmas period and New Year's period, you start to see prices, if they all stay the same from what they were in December and compare it to Jan. And what we were seeing is when we got into Jan, it was like prices jumped 40 to 50 grand.
I remember that specifically, yeah.
And I remember Ryan coming to me and a couple of the other guys and like, hey, Frank, this is what's going on. This is not good. Like it's jumped up way too much. And it's like I'm paying an extra 50 grand for a 3-bedroom house compared to 3 weeks ago. And I was like, okay, let's have a look. We had a look what's going on. Multiple offers out of there. Let's go.
Okay.
Move on.
That's super interesting. Again, it is the opposite of what people think. People think that when you're in a market and you're getting blown out of the water, it is the right market to be in. If you're a mum and dad investor, you haven't got the time to do the research, you don't know how to find another region, yeah, sure, you're going to be lazy and going to say, well, no, this is still the market. You're going to tell yourself that. But if you're a professional investor, if you work with a buyer's agency, you go, no, stop. We stop. We're measuring this on a monthly basis, or I mean, Gladstone example, on a weekly basis, where it's like 3 weeks ago, this wasn't the case, bang, let's move.
And data is great, but data doesn't tell you what's going on right there and then.
Correct.
It's lagging.
Correct.
So people will go listen to these other gurus that start talking about data, and we've got the data metrics to tell us when to buy and when not to buy. It's like, yeah, no, that's not correct because it's going to be lagging. Okay, so people listen to this. It's lagging data. What's happening right now is not going to show up what's on the screen.
Yeah.
And so people need to understand if you're staying in there too long and you're relying on the data, you could be buying at the top.
Not at the top, but yes,
Close
I
to
understand what you're saying.
You've missed out on already 40, 50% growth or more.
Yeah.
So it's quite important to understand it. Like in Townsville, we're buying property. I remember buying a duplex for like everything at 320, 340, 350. All those properties worth 600
Who bought
plus.
that duplex for threes?
We've got a few, but there was Carl and Snedge and a couple other clients.
Crackers.
I think there was another one, Ning and Nicole. No, not Ning. What was his? I forgot his name.
Anyway, it is what it is.
Yeah, there was another client who's not with us anymore, but I remember we bought a property for 360 and he was complaining, saying it's too much. And I'm like, I go, no, it's not too much. I go, this is a great property. It's going to do extremely well. He's like, oh, the rates are too high. I'm like, mate, I guarantee this property's going to be worthwhile.
Is that the one in Norman Gardens?
It'll be normally, it's either in Rocky or Townsville. And we paid 360 and I was like, listen, it's going to do extremely well.
Okay.
I know today that property's probably renting close to $750 a week in rent. So huge rental yield.
Not bad. Not bad. Let's keep moving. What's next?
Number 3, Gladstone, 27%. Stopped buying there, probably towards the end of last year.
Yep.
Okay. There's a little bit of start this year that we're kind of, still getting at great prices there, but that market there is doing extremely well. I think it was number 1 or number 2 at the start of this year in Queensland, of one of the best performing markets. It still has a lot of room to grow.
Yep.
Okay, but it's a market that has had it's quite funny if you look at Gladstone. We're buying a lot there around that COVID time, and then it really dropped off, and markets started going a little bit kind of sideways or backwards, you could say. And we kept buying in there because I knew that it was going to turn around, and we're just seeing that little drop off because of interest rates. And then I knew what was going on from a research that market was going to take off. Kept buying in there, and it's done extremely well for our clients.
It's awesome. And you stopped buying there end of 2024?
Yeah, around 2024. A little bit of 2025. We bought some clients' properties there just recently. At start of Jan, this February there. And that's just because we're finding some great deals that we're getting off market from our agents. We're probably one of the first buyers agencies to be in there, to be honest.
That's awesome.
So it was great.
That's awesome. Next.
Number 2, Bunbury, WA, 29%.
Okay. You've got a property there?
Yes, I've got a property there. It's done
29%.
29%. Towards the end of 2023, maybe the start of 2024, we finished up buying there.
Gotcha.
Okay, and it's done extremely well. I bought a property for $430. I reckon that property's worth $680.
It's huge.
And I bought that at the end of 2022.
It's huge.
Yeah, end of 2022. So it's done extremely well. It's a market that I probably would not recommend anyone getting in there at this point, even though it's still ticking along and doing this amazing growth. This data here is from 12 months today.
Yep.
Okay, so 12 months from today, July to June
July
last
2024.
Yeah,
Yep.
July 2024.
Awesome.
Number 1, Geraldton, 31%.
Massive.
Okay, and we stopped buying there at the end of, I think towards around October last year, and around the end of October last year, 2024. A lot of people get scared of WA, of these towns of a mining town and stuff like that. Geraldton isn't a mining town. I think it's just a town that just seems to just plug along. It's at the moment, they don't have any properties on the market for sale in most suburbs.
Yeah, some of the agents are contacting our guys, aren't they?
Yep, correct. They're asking us, saying, hey, do your clients want to sell their properties? And reaching out to our clients and saying, hey, great time to sell. Property market's increased by 30-something%. You can probably sell your property for $200,000-300,000 more than what you purchased it for.
Not bad going. Better than a kick up the backside, that's for sure. That's awesome. So Geraldton, 31%, that tops the list. Still to this day, I bought that one property. I should have bought that second one there, but that's okay. I didn't do it. Things happen. Amazing to our clients reviewing that. Happy days, right? You guys have, let's be honest, 6% is the Australian average growth rate, 6.5%. The top 10, it's tripling that, which is beautiful. Absolutely beautiful. Anything else you want to touch on before we go into kind of the worst performing?
I think the market timing is important. Some of these properties markets we got in, we're in there for 12 to 18 months, sometimes 24 roughly, because if you go nice and early, like Rockhampton, we're in there for a couple of years.
Yep.
Same with Townsville and a couple others. So getting in you're never going to pick the bottom, and it's hard to, time where the middle is, and it's hard to time where the top is.
Yep.
But if you've already seen a market had like 40% plus or 30, 40% already in a very, very short period of time, I'm not talking like 1 or 2. I'm not talking about like over 4 years, 5 years. I'm talking about like over like 12, maybe 18 months. You've seen 30, 40%. Do not get in that market.
Yeah.
I think that market might keep going, but it's going to get to a point where it can start to run out of legs, and it's like, okay, well, you can be the person that buys at the top, like most people did in COVID, or just bought because of emotional buying and following what the crowd do. I think one thing to do is not do what everyone else is doing.
For sure.
And we fell into that trap very early on.
For sure.
I remember listening to people saying, oh, you got to diversify your property portfolio. I got into stocks. I got into crypto. I got into gold and silver. I got into property. And it's like, man, I was just running around chasing the emotion.
Yeah.
And I made some of those investments really pulled off for me. A lot of them didn't. Like gold, yeah, it's done well, but it's just sitting, it's just sitting there doing nothing, no cash flow. Stocks done extremely bad, dropped halfway, in value. So like I can't even sell them because I'm going to lose half my money, and I put 30, 40 grand into that.
Yep.
Crypto done extremely well, but just got really, really lucky. And property, I done really bad at one point, but then I turned that around, focused it on that. So I think just picking one thing and understanding it is probably the most important thing.
Yep. And I think even with this information that you're listening to right now, and if you're listening to our podcast, just listen to us. If you are going to listen, question it, do your due diligence on everything, because it might not suit. So I think that's fine. And I reckon 100% with the market timing. At the same token, if you are going to just hold the asset forever and you're not really fussed about picking the best market in the country, do whatever you want. Do whatever you want. Go buy in a capital city, sit on it for the next 30, 40 years. Happy days. You're good as gold. Yep. Let's get into the worst. I want to talk about some baddies.
I'm not going to... I picked major cities and towns. I wanted to make sure it was like over 20, 25,000 people in the LGA, because there was a lot more worse data out there. There was markets that have gone backwards in the last 12 months by 100%.
What?
Yeah, 100%. But I'm talking like outback, LGAs.
Okay.
Towns that, have 300 people, 400 people,
Okay.
500 people. So I wanted to get the data to just make sure it's correct, where it's, or not correct, but it's more accurate in a sense that there's over 25,000.
People can relate to it. People can actually go, oh, I know that place, not but fuck nowhere.
Correct. So
cool.
First one, or a couple of the surreal off, we've got Mornington Peninsula in Victoria. It's gone back 5% in the last 12 months. We've got Manningham. It's gone back 5%. For some of these people that don't know or not familiar, Manningham's like Doncaster, Templestone, around that area here in east north of Melbourne CBD. You've got the Bass Coast, which is like Cowes, Wonfaggi. Like you could say it's a bit like that holiday vibe, similar to Mornington Peninsula. It's gone back nearly 6% as well. So
what can you touch on just the median prices for those regions, what they are? You've got that?
Yeah, I've got that. So Mornington Peninsula, 1.1 mil is like the median house price. That Manningham region, which is like Doncaster, Templestone, it's around 1.5 mil. Okay, and then you got Bass Coast is around that $680,000.
Awesome.
For a property there.
Awesome.
Around, Inverloch and Cowes, which is Phillip Island.
Yep.
Where they have the motor race. So as you can see, there's been massive drops. I guess Victoria has had a lot more negative drops. Like you look at as well Maribyrnong, okay, the LGA of Maribyrnong, it's gone back 3%. That's got Aberfeldy, Maribyrnong, Moonee Ponds as well. So like it's started to gone back in value. Same with Geelong, Greater Geelong, negative 3%, okay, over the last 12 months, which isn't great. Same with Ballarat and some of those other places. Now, for New South Wales, we haven't seen too much. Places like Byron Bay has dropped. Median house price is 2.2, 2.3 mil. It's dropped about 2%, 3%.
Yep.
Okay. You got places like Randwick, Canada Bay, Northern Beaches, Georges River. Okay. They've grown around 2 to 3% in the last 12 months, which is like near the CBD of Sydney.
Yep.
So you've seen Sydney not do too well, but it's doing better than what Melbourne is.
Wouldn't it be interesting if you had a view of all of these negative places? I'm looking at a few of these regions that you're talking about. Wouldn't it be an interesting take if you went, there's negative growth there. Is that a good time or a bad time? I mean, for a lot of these places, it's not a good time, but when you see negative, what most people think is that's bad. That's very bad. You obviously think very different, I'd imagine.
Yeah, some of these markets I do know we're kind of in.
Yep.
For our clients, capital and regional. So I think it's looking at that market and saying, okay, how long has this been going on for? Now, COVID, I look at COVID, it's kind of a disruptor.
Yep.
It wasn't meant to happen, but it did happen. And those markets that grew in value weren't supposed to grow. And the ones that aren't growing at the moment, as I've kind of mentioned, there's even more on this list that we're looking at here, like even Hobart's on this list and a few others. They weren't supposed to grow during COVID. They're supposed to go backwards or have a reset.
Yep.
So over the last 5 years, I look at that as saying, okay, these markets really haven't grown, even though there was that 10, 20, 30% maybe during COVID. they haven't grown. Now there's starting to be a change in the tide. Not for every place, but places like Bass Coast, I do believe it's going to change. Places like Mornington Peninsula, it's not there yet, but it's still going backwards and days on market is increasing. Eventually that place will change. And same goes for, some of the other places I've kind of mentioned on that list. So there is going to be a change. Is it going to happen right now? I don't think so. It's going to be something that will come in the next 12 to 18, maybe 24 months. Yep. These markets will start to change, the tide, or start to move in a new direction.
But it's almost the opposite of how you think. I think that's what the viewer needs to really consider. When you see a region that's done negative growth, one, you're going to hear people say, the market's hard. But you got to, if you're actually smart enough to actually look into the data and actually dig in, you'll find that, like I can tell you, I'm not allowed to say it, but we're starting to buy in some of these regions that you've just mentioned there, regions that have done negative growth. We went and visited a region not long ago. The year before, it done 3% growth, a lot less than the Australian average, right? Why are we getting into those regions as opposed to the other end, which Geraldton's done 31% and Rockhampton's done 28%. The common investor is going, I'm going to get into that market. It's literally the opposite. You need to think different. Why do you need to think different? One, because 99% of property investors don't know what the fuck they're doing. But two, you need to just go against the herd. You just have to. Because if you just do exactly what everyone else is doing, you're just going to get the same result. I love it. Okay, so there's a few things there. Anything else you want to touch on that?
Yeah, so I'm not looking at data here. So these markets, you're going to look at the data, it's going to be misleading. I do look at some of it to understand what's going on and what the patterns are from the past and kind of if there is a little bit of a change. But before the change happens, because when you see the change start to drop off dramatically, like let's just say days on market's been going up, okay? And you see it going up and it's gone from 50 days, that's 70 days on market in this area, and then all of a sudden it starts to go from 70 and it starts going down towards 60, you've probably missed out on 3-4 months of buying there or maybe more, okay? Because it's lagging data. So what I try to do and what we do at Fresh Start is looking at the economy, looking at projects, looking at jobs, looking at migration. I'm looking at what's going on from a bird's eye view, okay? And so with that, I start to understand, okay, is this market going to change? Because an investor is trying to predict the future.
Yep.
And a lot of investors don't like to predict the future. They like to invest like now, seeing the evidence, and they get scared and be like, I don't know if that's the right decision. And that's fine. That's because you don't know. And of course, people don't know how to do this. So they will follow the herd and they get there too late. Like a lot of people are still buying in Perth. You should not be buying in Perth.
100%.
You should not be buying in Brisbane. You should be moving into other markets that 100%. Are about to take off. So it's looking at
the 2032 Olympics is coming.
It's a long time away. So we don't know if it's going to be doing well then, but it might. But it's this is where people need to really think about this with a different perspective.
Cool. Okay. Give me the tools.
Tool of the year.
The tool of the year.
Open it up.
What do we got?
We've got there. I'm not sure if you're going to read that, but I'll read it. But
I'm going to read it?
You can go for it. The tool of the year.
All right. The tool of the year.
You don't have to read it word by word, but just look at the name and look at the policy has been created. And I wanted to add this in. The reason why I want to add in the tool of the year because I think
this is an awesome tool, guys.
I think it's
Poor Carl's going to look at this and think, "Fuck me." The Victorian Labor government under Premier Jacinta Allen, as part of the May 2023 Victorian state budget, the government introduced a COVID debt-related temporary land tax surcharge that drastically cut the land tax threshold from $300,000 to $50,000 for an individual landowner, $25,000 for trusts. This took effect 1st of January 2024, impacting the 2024 land tax year onward. That's the tool of the year.
That's the tool of the year. And so
that's the stupidest thing you've ever seen to date?
Yes, one of the stupidest things because it's not going to do anything really. It did stop the market a little bit. You got people leaving Australia, Victoria, and they're moving on. But I think it was one of the dumbest things that someone like that in power that doesn't understand how property works comes in, puts a policy. And why did I want to add this in is because I think it's the most dumbest thing that's ever come into history because it's not incentivizing businesses to flourish in Victoria. It's like, why would we want to invest here? Why would we want to put our money here? Mm-hmm. From not just from buying investment properties, but even business owners to start a business. It's like, well, I'm going to buy a business, commercial business, and pay all this land tax because of these rules.
You've fucking pulled the wool over the viewers' eyes. They're expecting a tool here. I mean, I'm with you. You've got to give them a tool.
There is a tool.
Okay.
There is not a tool. There is a special gift.
Okay.
There's a special gift later on, but I just wanted to throw this little spanner.
I love it.
In the works.
What else have we got? What else do we want to go through?
I reckon we can talk about. I would love to share some of the best places over the next 5 years. Yeah, in some of the states and territories, so we can just share with the viewers what's going on and where they can probably focus on.
Yep.
So if you have a look there, well, this is start with Victoria, best places and I've picked these markets that have grown in the last 12 months, best performing markets for every state and territory.
Okay.
From today.
Okay.
12 months.
Okay.
Over 25,000 people once again, because I don't want to pick small towns. We probably haven't even heard of them. So let's start with Victoria. You want to pick number one, where it is? Is it capital city, regional town? Regional?
Yep.
You're correct. Mildura, 13%.
Awesome.
Best performing market at the moment in Victoria. Better than any capital city.
Awesome.
Okay.
I love it.
Number two, Southern Grampians, 11%.
Yep.
Number three, we've got Wodonga, great market, 5.4%.
You love Wodonga, don't you?
I like Wodonga.
Why do you love Wodonga?
I think it's a strategic location for Victoria and New South Wales. A lot of trucking goes past there, and it goes into Wodonga, Albury as well, which Albury I do love as well. And with that, of course, it's attractive to different industries. You've got the ATO headquarters in Albury, which is on the other side of the New South Wales River, of the Murray Bridge there. And I think there's a lot of migration happening there at the moment. Cool. So that's doing quite well. Number four, we've got Swan Hill at 5%. And then number five is got Hobson's Bay, which is 4.7%.
And these are all, I mean, the last three, right? They're all below the Australian average.
Yes, they are. But
So
there is a change in those markets.
Okay.
There is a change.
You're not saying it's not personal advice, but potentially that could be a market that you might be looking in and maybe would suggest to potentially
once again,
look
I don't
into.
like to suggest anything, but this is just giving the
Of course.
listeners and the viewers something to look at, some of the best performing markets that in the last 12 months
Done.
they're performing.
Tell me New South Wales.
New South Wales. Number one is Lismore, 23%. Now, we did have the floods there maybe a couple of years ago. Okay, so the place did get flooded out. Property prices dropped by 50%, maybe more, because of the floods. So it is a place you do need to watch out, but it's on the verge of growing and there's a new front happening. So 23%. Number two, Stratford, 22%, okay, which is in the inner west of Sydney there. And then we've got number three is Upper Hunter Valley region of 13%.
Beautiful region.
And then we've got Tweed, which is around 13.5%. And then Muswellbrook, which is number five at 13%.
Nice. That's awesome growth.
Some of those places do need Muswellbrook, I do get a bit concerned. It does have that coal mine there, which is fine. It's still going to do quite well. I think a lot of the energy resources in Muswellbrook go to New South Wales, which is great. So there's a lot of things there that are doing quite well. But once again, some of those regions do make sure you do your research as well.
Queensland, you've touched on that mainly. That's Gladdy, Townsville,
Rockhampton,
Rocky. Yep,
Mackay,
awesome.
and then Central Highlands, which is like Emerald.
Yep, okay.
That's done 21% as number five. SA, let's touch on SA. SA is an interesting one. It's done quite well. We look at Murray Bridge, which is number one, 19%. Murray Bridge is this small town, regional town. It just seems to tick along and keep doing what it's doing. It doesn't look like it's slowing down, but it's still doing quite well.
Awesome.
Number two, Playford, which we've purchased in. Number three is Barossa. Number four is Gawler. And number five is Port Augusta. Port Augusta, 16.5. Gawler, nearly 17%. Barossa Valley, 17% as well.
Love it. Okay. Final WA, you kind of touched on that as well, but that's Geraldton, Bunbury.
Yeah, you've got Geraldton, Bunbury. Number three is you've got Fremantle, 25%. Perth City, 24%. Albany, 23%.
Huge.
Okay.
I mean, that's clearly the winner of the last 12 months. It's WA.
Yeah,
and it'll continue the run, right? Maybe not those numbers, but it'll continue the run.
Yeah, that's right. And I think you do need to watch out buying there. Still, a lot of people are still buying there, which is dangerous, I believe. But move on. Tassie, got Central Coast, 11%, which is like Udison, Penguin,
Okay.
So those coastal towns really, really nice. We've got Brighton, number 2, which is 4.9%, which is it's in Hobart, north of Hobart, kind of like I always like to touch on Melton, or maybe I'm a bit of an asshole, but it's like the Melton or the Dandenong of Melbourne.
Yep. It's got that bad name, got that bad feel.
Name,
yeah.
Launceston, number 3, 2.7%. Devonport, 2%. Burnie, 1%.
And just on that bad name, right? Port Melbourne in Melbourne used to be a shithole. Footscray used to be a shithole. Have a look at those markets now. So nothing wrong. Again, I want to just quickly touch on, did you want to touch on NT or you?
We can touch on NT, but we keep going.
I just wanted to, I just want to remind the viewer, if you're going to take one thing out of this right now, all the regions that Frank's mentioned, and it's 30%, 28%, 25%, people look at that and go, I don't even know the emotion that will elicit from you, but people will look at that and go, oh, is that a good market to get it? No, it's not. The other regions that you've mentioned that have 2%, 3%, 1%, those are the markets, hint, hint, that potentially Fresh started buying in right now because that's at the start of its growth phase. So go over these notes, look at it and go, it's obviously got to do your research, of course.
We're going to show people.
Okay.
So
you've done a lot. Do you want to touch on NT?
We'll do the last of NT. So NT number 1 is Catherine, 10%. Number 2 is Palmerston. Palmerston.
I don't even know how to pronounce that.
Palmerston or 5.7%. Alice Springs number 3 at 3.6. Darwin at negative 1.5. And then Litchfield at negative 4.2%.
Which we're not much in NT. So
no,
I think we can roll through. What do you got for me?
So I want to do this podcast. Say it's going to come out when, Carl? We're talking probably 2 weeks from now. Okay, I'm going to talk about some of our clients' best performing properties in the last, say, 10 months or less. Okay, that we've been buying in.
Mm-hmm.
Some of these markets we've been buying in. I think we want to not. I'm not going to reveal them right now because it'll be a disservice for our clients that come on board.
Reveal the regions. Okay.
But I want to reveal them probably in 6 months towards the end of this year.
Okay.
Like 2020, start of 2026.
Okay.
And we potentially might be still buying in those regions. But I want people to look at, what these markets have done now with some of the results. And then what we'll do is I'll get these clients' properties from now to, say, Jan 2026 and show how much more they've grown by.
Okay. I like it.
Okay.
I like that.
So I've got one client here. I'm just going to go off their first name, Marcus. His property's grown 28% in 4 months. Too good to be true. 28% in 4 months.
Can you tell us a state?
Tassie.
Cool. Okay.
Tassie.
I'm happy with that.
Okay. Christina, and sorry, I'll touch on that. Come on, Marcus was born in Feb 2025.
2025.
Okay.
Gotcha.
Christina, got March 2025, 11% in 4 months.
State?
Tassie.
Okay. In Tassie.
Okay.
Surprise, surprise.
Sean. Jan 2025. Property's grown by 13% in 6 months.
Cool.
Okay.
And again?
New South Wales.
New South Wales. Awesome.
Okay. It's a different market once again. Benji, Brooke, March 2025. In the last 4 months, the property's grown nearly 10%, 9.7.
Mm-hmm.
Okay. That property's in WA.
Okay. Purchase this year. Gotcha.
Okay.
Gotcha.
Dan, March 2025, 4 months, grown by 6%.
Love it.
So probably not as good, 6% when you compare 28, 11%, 13%, but still 6% in 4 months.
And annualised as well, right?
When you look at the annualisation,
That's 18. 18.
And that's in Tassie.
Awesome.
And then lastly, Shri and Nia, December 2024, 13.6%. That's 7 months.
Yep.
Victoria.
Ooh, okay. And in 6 months' time, we're going to go over these exact numbers and then compare the pair, what they've actually annualised to over the 12-month period. Now, obviously, 12 months is not a very long time. However, it's pretty cool to be able to say, hey, my property did 20% plus in the first year. And then again, 20% next and next and next.
Well, our client Marcus, we bought this property in February, settled. We ordered a val, 28% it grew by. He took out about 110 grand because he put a 20% deposit down. 110 or 105 grand out of that property, and he's gone and bought his second property right now.
He just went under offer today, I think.
Yeah. And so it's like, that's crazy for him. He's like, whoa, Frank, is this like normal? I'm like, yeah, I've seen I've seen 50% in 1 year. Yeah, I think we've seen 50%. In that same property was 50% in 6 months, but by 12 months, it was still 50%. It was the same valuation that came in. So
I think though people when they hear that, they kind of get maybe a little bit fearful. They're like, is it just like a boom or and like a big but? No, it's not. It's like we've got a very, very, very strict guideline that we need to abide by when we invest, not only for our clients, but also for ourselves, right? It needs to be, all the standard stuff. 5 major economic drivers driving the economy. So it's not going to be, it's like some of the regions that you said before, dropping by 30% because there's a flood. Like there needs to be things driving that economy to ensure that economy is stable. Now, yes, the people that you mentioned before, I won't go over it, but they've seen 25, 30, 35% growth, whatever it is in the year. That growth continues. So it's not a boom, then tomorrow it's going to go and drop down. Absolutely not. It's literally the complete opposite.
Yeah.
So they just got a bigger head start than most people. So I love it. All right, let's keep rolling.
So I want to leave this with the viewers that, with action steps on what to do.
Okay.
Some people listening here want to try and do this themselves. They want to review their own portfolio. They want to try and do the research themselves. We want to give you the tools. I said there's going to be a gift. There is a gift. There's a bit of a bonus towards the end.
Not just the one tool of the year.
And if you're still watching, fantastic. This means that, you want to learn and you want to grow. So first step, number 1 is review your portfolio. Okay. What is your portfolio doing at the moment? How are your properties tracking? Okay. Analyze them. How much have they grown by in the last 12 months or since you've owned the properties? Are they still growing? Are they starting to plateau? Or are they stagnant? Or have they gone backwards? Do you need selling properties? What do you need in your portfolio? Do you need cash flow assets? Do you need growth? Do you need a mixture of both? Can you buy a property that does both? You can, definitely can. So reviewing your portfolio is going to determine, okay, what type of property you need next, or if you need to do something with the portfolio by selling some of the properties.
Yep.
Okay. Number 2, review your loans. Look at if you need to reduce your loans and reduce the interest rate, I should say, so it's cheaper for you, more affordable to hold the properties. Maybe there might be equity or some valuations. Take out some equity, use that to, buy your next property and understand what your borrowing capacity is. How can you preserve that borrowing capacity? Trust, company, or buying on a different entity. If you haven't got a property, okay, what's your borrowing capacity? What can you borrow? Okay, if you haven't got enough of the deposit, what do you need to save to be able to buy your next property? Start working out these things. Start understanding, okay, where your position is at. Because without that, you don't know what you're doing. Number 3, start learning, start educating yourself on property fundamentals, research. For me, I like looking at, CoreLogic. They release a monthly report, all the data of the best top 10 capital regional towns of data, what's going on. I look at other programs that we use. We use a lot of suburb trends, SQM data, and some private data that we generate as well. We read that. There's a regional migration report that we get. We also get, there's just plugging out some names there, but, you got Smart Property Investment Show. They got a mag. Realestate.com have a mag. Simon Presley does a great article on research. I look at that. I also look at some of the research tools that we use, I look at ABS data and things like that, and I look at those data metrics as well. I understand what that does for a company. But start educating yourself. Start looking about how research works and look at trends. The more you start to understand a trend, it becomes so easy then picking those markets. Like this gets easier for me now because I understand how property works and what markets to look at. It's not that I don't look at the research anymore, but I can see it much clearly because I do it every single day.
Of course.
But so can you. Once you start to see a pattern, you can identify it. Number 4, bonus.
The tool.
Let's roll it. We're going to give you, and if you're listening right now, we're going to give you, and we're going to put it here somewhere. I'll leave that to Carl. It's our 72-step process. Okay? How to do this from start to finish. What we look at. With that, you can do some research on those processes of what we do. Okay, educate yourself. That's the best way to learn. I said learning, educating yourself. This is one way. So we're going to give it to you for free. So you can go out there and start learning how to pick these markets yourself. Love it. Identifying these hotspots. We do have new reports coming into motion. I think as Amelia is doing it right now. We've got a document, a little bit not as aggressive as a 72-step process, but I think we're about 10 or 12 metrics that we follow.
I think it's an ebook.
It's a bit of an ebook of how to identify a hotspot. Yep. There's some other things there. We've got a location report of some of the best property markets nationwide.
Love it.
And what's going on.
Love it.
And I think there's going to be a beginner's guide step also that's coming out.
I love it.
So that's going to be on our website. So stay tuned. Our 72-step process, that's on our website, I'm pretty sure.
we'll get it to you.
We'll
if
get
you're
it to you.
listening and you've stayed to the end, Frank made a promise at the start. You got your tool. The tool we sent to you one way or another. I don't know how that we're going to do it. We're not the tech guys.
And last one, I think, do you want to give that away or what do you want to do there? Or you want to just show what's...
I think let's keep that. You can't give out too many tools in the one.
You don't want to give that out? Or not give that out? How about we can see if people are interested in that?
If anyone is interested, there is a DIY course that we also do have. How to actually do it on your own. We're not going to give it out because it's too much in the one thing. I want to save it for another episode. That's why I don't want to do it.
But we do offer that as a course.
Yes,
Okay.
correct.
And so if you are intrigued and you want to learn more about that, that's showing you how to do this from start to finish. You literally can start a buyer's agency with that course.
That's how you use and to train up the guys right now.
Exactly, from start to finish. And I think that there, if you are interested and you want to do it yourself, I believe it's the best course out there. I think it's better than any other course that we've done to start this business.
Yep.
We touch on research, how to pick markets, how to pick a hotspot, how to negotiate from start to finish. Everything that is in there to understand what we're spoken about today as well. So
For sure.
I don't like to sell things or push things. It's something there that I like to offer. But once again, hopefully you got enough out of this podcast to say, hey, we can go out there and start doing this ourselves.
We told you when we started this in-person podcast that we were going to give more than what it takes. Your time on invested, your 40 minutes that this has taken, I hope it's been worth it because out of it, I think the biggest lesson here is do not look at a market that is going ballistic and go, that's a good time to buy a property. Cost yourself hundreds of thousands of dollars. Think the other way. But then on top of that, even if you didn't learn that lesson, you've got a 72-step process there, exact research methodology, which we've used to now help 500 plus clients beat the Australian average growth rate. And then there's even a course. I think it's a good return on investment. If you've dedicated the time, I don't know the numbers, but you've probably made $100,000 just from listening to this podcast. Frank, that was beautiful.
Or saved $100,000 from making the wrong step.
Yes, or more, or maybe more, 300. Frank, beautiful. You ran that entire show. You put this whole thing together. I was just listening pretty much, and I learned quite a bit as well. So thank you again to the viewers. We'll see you next week. Got another banger episode, and to your success.